Welcome to the Unicorns Podcast. I'm your host, Justin Kelly, and we're back for 2025 for another year of interviews. Today, it's a deep dive into the world of digital assets, crypto markets, and investment strategies. Our feature company is Digital X, which is listed on the ASX with the code DCC. With Bitcoin's rise past US $100,000 and growing institutional adoption, we'll explore how the investment landscape has evolved, the impact of regulatory shifts, and what's next for crypto in Australia and beyond. Alex Nagorski is a portfolio manager at Digital X, and he joins me now. Alex, welcome to the program.
Thanks for having me, Justin. It's good to be here.
Crypto is still new to many investors. It's been around for a long time though. Bitcoin has broken through the US $100,000 milestone mark last year. That seemed to cement its place as a legitimate asset class. So as Australia's longest standing publicly listed crypto fund manager, how has the investment landscape evolved over the past couple of years?
If you look at Bitcoin, it's had many cycles in its lifespan. Most recently, if you're going to look at historic patterns, I guess, we had a market top in 2021, which was followed by, I guess, a collapse of several institutions within crypto, and that led to a lot of fear and uncertainty about the asset class. However, Bitcoin itself has been a secure and immutable tested asset the entire time. It's more so the people around it that have been
evolving.
that have been evolving, exactly. And I think what's different about this cycle is that the people around it have evolved. We now have Bitcoin ETFs, and that was really the thing that sparked this most recent bull run and cycle. You have the likes of BlackRock, VanEck, other large financial institutions who are creating products in the space, providing an outlet for investors to invest through stock exchanges and their traditional sort of brokers that they might use without having to work out the details of the specifics of managing their own crypto. As you know, there's been a lot of Bitcoin that's been lost over the years due to mismanagement of keys, and Digital X provides that same outlet for investors with our financial products in a safe, regulated way, letting people access Bitcoin without having to worry about managing those keys and providing an outlet for them through our ETF and wholesale fund products. We basically take a long look at the counterparties we use and make sure that we're using only the best-in-class custody and broker networks, and use our expertise to avoid the poor actors in the class, a lot of which have gone away over the years, and that's been the major development with the approval of Bitcoin ETFs as a financial product in the States. That opened up the pathways for us to follow in Australia with our own product for retail investors. So that's been the evolution over the last couple of years. Has been really the adoption from institutions and these kind of high-grade products.
You mentioned regulation. Let's just explore that a little bit. What are some of the regulatory developments that have had the most significant impact on crypto adoption?
We probably need to take a broader look at regulations and how they affect crypto markets to answer that question. Different regions in the world have different approaches to regulations, and it's created dislocation of crypto companies moving from less favorable jurisdictions to more favorable ones. I would say that jurisdictions that have adopted crypto, specifically Dubai and Singapore, have been the main beneficiaries of the outflow of talent from places like America and Australia to a lesser extent. Our approach and America's approach has been to, rather than to create new legislation, has been for regulatory agencies or the enforcement agencies to, like the SEC and ASIC, to interpret crypto and try to shoehorn it into the existing regulation, even though crypto a lot of times doesn't fit the same patterns or doesn't necessarily correspond well to the existing regulations, and really requires a new view, which sometimes the legislators are slow to act on. So that's really led to a dislocation of capital and talent from places like America and Australia to those others. So in Europe, they've developed regulation as well, and we look at regulation favorably. It's just that we require legislators to come in and really work with the industry, produce laws that doesn't hinder the development of these fintechs and doesn't lead to the outpouring of talent overseas. I think Senator Andrew Bragg from the Liberal Party was very good at engaging with the industry and consulting and trying to develop no-nonsense sort of approach to crypto in Australia, really focusing on those inflow and outflow sort of locations of companies into and from crypto. So if you look at exchanges and custodians, other service providers, managed funds, basically creating a structure around those that can let investors enter safely into the asset class. And that's what they were really good at doing. Since then, though, there's been consultation papers, but really the legislators in this country and in America, I guess, to an extent, have left the regulation to the enforcement agencies to figure out basically how to fit crypto into the Corps Act without having to make any adjustments. So we've had those guidance papers come out, but really it makes it difficult for startups to work here. So a lot of them have left overseas from Australia, and I think even if they do work on developing something domestically, they might go overseas later. For us, it's at Digital X, it doesn't really impact us that much because we have a very simple financial products, traditional managed funds and exchange traded funds that fit very well into the existing legislature. It's more so for those crypto startups that try to do unique things in the crypto sort of environment.
I understand.
Yeah.
Well, let's talk about Digital X. Can you discuss BTXX's performance in the Australian listed crypto ETF market and what factors have contributed to its position and who are some of the competitors?
On the ASX, we only have 2 Bitcoin ETFs. One is VanEck and the other is Digital X. The fund has performed very well in the sense that it's a passive vehicle, so all it does is just holds Bitcoin. It's a low-cost option that tracks the Bitcoin price very closely and provides an outlet for ASX investors to invest into Bitcoin. The difference between us and VanEck is that we actually hold the Bitcoin. They just have a feeder fund into their US entity, whereas Digital X is the only one on the ASX that actually holds the Bitcoin and uses domestic counterparties. So in that sense, we've done well in terms of the interest it's been getting, and I think there's just more to come in that space as more institutional investors and other investors in the ASX start to consider Bitcoin as a investable asset class. So yeah, looking forward to the continued adoption.
And how do you see the relationship evolving between traditional financial institutions and the crypto asset class moving forward?
Up until last week in the United States, there was some SEC rules like this SAB 121, which meant that financial institutions like banks had to provide a lot of regulatory capital against crypto that they held on their balance sheets. So it made it unfeasible for banks in the US to provide services tying to crypto. Now that we have a much more friendlier administration and a friendlier SEC, that rule's been taken away. So I think what you're going to see this year is a large push from financial institutions to provide products directly in the crypto space, as they're now actually able to hold assets like Bitcoin for their clients, which was difficult for them to do in the past. Not impossible, but difficult. So I think you're going to see a movement of financial institutions spinning up crypto adjacent products and services. I think that the adoption is going to continue. It's a very volatile asset class, so no one can tell you it's just going to be a linear path to adoption. It's probably going to be ups and downs, as you've seen before. But I think adoption is only going to continue to increase as we now have a very friendly sort of administration, and we have the pathway to get us there.
So what regulatory differences are you seeing across the major financial markets?
I think I've alluded to some of them before, but essentially in the US, it was very hard for crypto businesses to do business. The SEC had an approach of regulation by enforcement and basically serving American crypto companies with lawsuits. And now we have an approach with the new administration of embracing the American crypto companies. So I think that administration is going to do rather well with encouraging business to come back to the United States that might have immigrated in the past. And I think in Australia, we're probably, 2 steps behind America, unfortunately. I think everyone can agree on that. Sometimes we like to follow rather than lead. So it's likely, I think, domestically we'll see a similar embrace, but maybe after
Just
next
a bit
year's
slower.
elections. Yeah.
So where does Australia fit into the broader crypto global ecosystem?
We're a small player, but we have large pools of capital here as well. So, I think we are yet to see a full embrace of the asset class from those larger pools of capital. I think they're going to open up eventually. So I think we are pretty much a follower in the space. We have great fintechs working here. We have great lots of companies trying to work with crypto in Australia. I think it just requires the government to sort of embrace the industry and work together to sort of create this new productive asset class for Australia. No one is scared of regulation. Everyone wants regulation. We just want the government to come in and work with the industry.
Do we have any competitive advantages in Australia?
So Australia, I think there's some competitive advantages. I think we have a great pool of human capital here. I think we have a great number of very well-educated people and talented people who can come up with lots of ideas. Sometimes it's just we maybe push them away to friendlier shores like Singapore or Dubai, where we lose some of our talent because they might just go to somewhere where it's easier to build their startups. That's speaking generally. I mean, in terms of financial services and our products, we have been working with the regulators of ASIC, and we have no issues with launching our products in the regulated and compliant way.
What key metrics do you monitor to assess Bitcoin's market fundamentals? Because it does bounce around a lot.
Yeah.
So what do you look for?
Yeah. So this touches on a question that I think many investors have about Bitcoin. Like, where is the value? Where do you find the value of these networks? And I think the value of Bitcoin and other cryptocurrency and digital asset networks, it's more closely measured by something like Metcalfe's law, which is used to value the value of social networks. So the value of a social network goes up the more users are connected to it, the more people are messaging on it. It grows with an exponential. The value grows with an exponential depending on how much activity is happening on that network. As we all learned when we looked at things like Facebook coming up back in the day. Cryptocurrency networks are not much different. The highest correlations of price for the tokens comes from things like the number of wallets, the number of transactions, the number of users on these networks. So when I look at Bitcoin, I look at how many people are using it, how many transactions are happening, what's the velocity of the transactions, how many wallets, how many active wallets. There's the beauty of blockchain is none of this stuff is hidden behind the corporate veil. It's all out in the public for everyone to see. Anyone can go and look at these statistics very easily, and they can see how well these networks are performing in terms of adoption. And I think, there's been a very clear trend there that adoption has been increasing over the years.
So how do you address concerns, right or wrong, about the fundamental value of Bitcoin?
Look, at this stage, I don't really need to address fundamental value of Bitcoin because I think it's proven itself as a time-tested asset, and that speaks more than anything I can say for Bitcoin. It's demonstrated its value as a store of value, as a transactional mechanism. There's different schools of thought about what gives Bitcoin value. But if you lived in, let's say, Venezuela and you were experiencing hyperinflation, or in Turkey when the Turkish lira was collapsing, those people in those countries massively embraced Bitcoin. They flooded the networks and the exchanges with the local currency because it gave them an easiest way to protect themselves and their assets from inflation. So that is literally the main value of Bitcoin. It provides a non-government controlled way for people to protect the value of their assets and their investments, and that's what it's done. So everyone can decide the value for themselves, but at this stage it's a time-tested mechanism, and it's helped many people protect their value and get away from issues like inflation in the domestic markets.
Some of your friends ask you about where the price of Bitcoin is going to end up? Probably all the time.
All the time. And, that's something I don't even answer to my friends.
No one knows.
Exactly, no one knows. It's a very tumultuous road. You've seen the ups and downs over the years. And, no one can tell you that, for sure the price is going to be here or there. We had over the weekend Trump coming out with tariffs that smashed all risk assets. Unfortunately for us, he did it over the weekend, and the only market that actually trades over the weekend is crypto. So if you're an investor and you have a bunch of risk assets and you take a view that you want to sell your risky assets, you only have one outlet over the weekend. So that adds to the volatility of the asset class, because we're actually the only one that trade during those less liquid times over the weekend. The price dislocation happens very quickly and very violently. So our funds are geared towards offering long-term investments. We have long holding periods, recommendations in our target market determinations, and we're not advocating anyone to trade and do any short-term stuff, and guessing the short-term price dislocations is just can be left to the speculators. Can be left to the speculators.
So what potential risks, be it technical, regulatory or macroeconomic, warrant the most attention in the current environment?
I think it's the current environment is probably one of the toughest in terms of macroeconomic environments as we've seen. The US going through that transition of administrations, it's a total upheaval of their economy, potentially going from a tax-based to tariff-based economy. The implications of that for global markets could be massive. So it's very difficult to predict what's going to happen with risk assets, and defensive assets, and digital assets over the coming months and years. So there's a lot of risks. There's macroeconomic risks if a number of things that could happen that would cause risky assets to be sold off. And unfortunately, Bitcoin is still very closely correlated with things like the S&P and other equity markets. So when those short-term dislocations do happen, we do get sold off along with them. So I'm not going to probably delve into all the specifics that could drive the share market down, but as you understand, there's a lot of potential catalysts coming from the new administration in the US. In terms of Bitcoin-specific risks, there's we have the advent of AI and quantum computing, and a lot of people raising questions about how that's going to affect Bitcoin and other digital assets. I think some of the quantum computing risks are probably overplayed in terms of them cracking the encryption. If a quantum computer could crack the encryption of Bitcoin, then it can also do the same to every financial institution on the planet and cause all kinds of havoc. So we're hoping that Google doesn't turn evil. But they're probably going to be the leaders in that space. But if there is a risk, there is a lot of active Bitcoin developers looking to mitigate those risks, and I'm confident that they'll be working very hard to sort of quell any concerns around that issue before it even becomes material in terms of a concern.
How do you see, Alex, the relationship between private cryptocurrencies and the central bank digital currencies that are now developing globally?
CBDCs, or central bank digital currencies, are an antithesis of crypto. The Bitcoin was born out of the need to sort of...
And frustration.
Yeah.
Yes.
It has different fundamentals. CBDCs are, not capped. Bitcoin has a limited supply of 21 million. There's programmatically can't be more than that produced. CBDCs can be an unlimited amount produced, very much similar like the, traditional fiat currencies. So there's benefits to CBDCs as well. There's, the improvement of access to financial services. You don't need a bank. You could probably just use an app to transfer CBDCs around, and probably improves financial access. The speed of transaction processing, is much faster with a digital asset network rather than batching payments through banks and those traditional networks like Swift. So improve some efficiencies in the flow of dollars. But they definitely can coexist. There's no need for them to collide and fight. Both have their own unique value propositions and have their own uses. It is interesting, though, that Trump has all but outlawed the development of CBDCs in the US. So while there's a lot of pilot programs happening globally, it's interesting to see what's going to happen with the US sort of saying no to that aspect. And I think him being very close to the traditional crypto space, a lot of traditional investors in our sector, raise concerns like privacy concerns and the ability to sort of, the lack of privacy, I guess, around CBDCs with complete government oversight where every dollar of yours will be spent. So I think those concerns maybe played into it. Who knows for sure? But yeah, he's actually, in the most recent bill come out, all about banning CBDCs in the US.
What are some of the ways to earn yield on digital assets? And tell me, why is staking so important?
Yeah, so over the years, there's been a lot of different companies and services offering yield in crypto. Some of the most popular ones, lending and borrowing. We've seen that be very popular, particularly in the last cycle. But we've also seen a lot of those centralized providers around that space go belly up, unfortunately, and investors lose money. So lending and borrowing relies on the trust of corporations, and those things have proven to be fallible. But other ways to earn a yield is staking. So staking is a very nice and approach to earning a yield, because all it does is all you do is help contribute process transactions on a digital network. So if you have a validator for, say, Solana or Ethereum, you're processing transactions for the network, you're helping to contribute to that network, and for that you get rewards and portions of fees that people pay for transacting on that network. And when you stake, you have a non-custodial way of just saying, I agree with what this validator is doing. I think they're a legitimate player in the network, and you're essentially providing trust to that validator. Mm-hmm. So they give you a share of the rewards for providing that trust, while you still maintain the control of your digital assets. You're not, unlike going with a company where you hand over the custody of your tokens to someone else, your wallet still controls that custody. So it's a non-custodial way to earn a yield on your digital assets. So in that sense, it's a relatively safer way to generate yield without having to go to any much more exotic ways that, there's a lot of, double-digit and maybe sometimes triple-digit yield opportunities being advertised or available in the crypto space, but those come with the very high risks. So people have to be very cautious about examining those risks before making those decisions. But we use staking in our wholesale fund to generate an extra yield on assets that we hold, like Ethereum and Solana. It allows us to retain that custody and the ownership of those assets while still generating an income for our investors.
And a final question to you, Alex. For those not familiar with the business, Digital X, it's a public company. It's listed on the ASX. The code is DCC. Tell us about the business.
Yeah, so we're a fund manager. We have an ETF and we have a wholesale fund. We invest in crypto ourselves. So Digital X is one of the only listed companies in Australia that has digital assets on its balance sheet. We specialize in crypto investment, essentially. We've been running these funds for a very long time. Our wholesale fund has been running for almost 7 years, so a very long track record in this space. We've been through many cycles, and I'd like to say we've seen it all happen over the last few years. We have developed very good expertise in the asset class over those years.
Alex Nagorski, Portfolio Manager at Digital X. Many thanks for coming onto the program today. Best of luck in the year ahead. Thank you.
Thanks for having me.